Today we will be reviewing the latest developments in the commodities markets. We'll be analysing the week's performance. The live session will cover an end-of-week summary for the metals, the energies, agriculture. We'll be reviewing the top trades of the week. We'll cover live market commentary and technical analysis. We'll look at the week ahead, so key events looking forward, and we'll of course be answering any questions you may have on today's webinar too. So we'll take a look at the fundamentals. So the big news today, U.S. Non-Farm Payroll data misses expectations. So gold price rose from a 5-week low on Friday as U.S. non-farm payrolls for June missed expectations. The U.S. economy added 209,000 new jobs in June, below estimates of 230, the Bureau of Labor Statistics reported on Friday. Meanwhile, the unemployment rate edged slightly higher to 6.2% from 6.1% in the previous month. So prior to the announcement, gold price traded near a 5-week low after the Federal Reserve tapered its monthly bond buying program by another 10 billion and gave an upbeat assessment of the economy at the conclusion of its 2-day meeting on Wednesday. Also on Wednesday, the U.S. Commerce Department reported that the U.S. economy grew at an annualized rate of 4% between April and June, the most in 3 quarters, which smashed expectations. The upbeat data falls into the camp of the U.S. monetary policy hawks who want to see interest rates rise sooner rather than later. However, there is concern in the marketplace that an accelerated U.S. economic recovery raises the stakes for problematic price inflation down the road, and that could be bullish for gold. In the short term, gold does remain supported as tensions between Russia and the West remain high, while fighting between Israel and militants in Gaza also remained in focus. Overall, gold prices are up 7.7% this year, having reached a 16-week high of $1,346 an ounce on July the 10th, as violence escalated in Ukraine and the Middle East. Elsewhere, coffee prices rallied midweek, soaring 2.3% to a 2-month high of 186.60 cents a pound as traders reacted to fresh reports surrounding crop damage in Brazil following the droughts earlier this year. We'll take a look at all of that on the technicals very shortly. Before we do so, I'm Phil Carr, professional trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world. So gold, silver, oil, natural gas, agricultural commodities. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio. Also responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders, and a regular contributor to a number of financial publications, speaking numerous training seminars, webinars and workshops. Joining me in running the Gold and Silver Club is Nick Kelsey, professional trader, investment analyst and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, Nick spent several years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. And through his first-hand relationship with some of the world's most successful traders, discovered the formula, mindset and tools that can give any individual the definitive edge to trade in any economy. Also regularly writes for a number of global business and financial publications, and we've appeared frequently on financial television. So we'll just take a look at the price of gold at the moment. We're currently trading at $1,291 an ounce. So we're 100 points from the lows of the day. We got a lovely spike from non-farm payroll. We were sitting very close to 1280 just before non-farm payroll, and we've had, at its peak today, we've moved over 170 points to the upside. So we'll take a look at the technicals very shortly. Before we do so, we'll just go over the top trades of the week using the Gold and Silver Club signature trading strategies. So first of all, we had a lovely sell short earlier on this week on WTI crude oil, sell for 250 points profit. We had a breakdown of a major support. The risk on the trade, 75 points, so $750 for each lot traded for a profit of 250 points for a 3-to-1. We then had a lovely sell short opportunity on wheat this week for 135 points profit. The risk on the trade, 55 points for a profit of 135 points. So $1,350 profit for each lot traded for a 2.5-to-1. And we also had a lovely breakout on coffee. So that was a 100-point move to the upside. The risk on the trade was 50 points. The profit on the trade was 100 points. So for each lot traded was $500 risk for a profit of 100 points, $1,000 for a 2-to-1. Okay, so we'll just take a look now at the live market technicals. So we'll just go over to the charts here. First of all, we'll take a look at the gold market here. So gold has actually been supported by a very key support zone here at the 1280 level. So that was a major support zone that we've been looking at today for buy opportunities. We've had a very nice bounce off this key level earlier on today. You can see here we retested 1280 and we had a huge surge on the non-farm payroll announcement. We've got a little bit of resistance here coming up to the 1297 level. We'd like to see a strong close here for gold as we go into the close here. We really would like to see, and we've got some key moving averages. We're just on the raw charts at the moment. We're obviously seeing a bit of profit taking right now around the 1292 level. If we can get a firm close back above the 1290s here, and certainly a close above 1300 would be very strong for gold now. We've almost got a railroad set up forming on the daily at the moment, which is where the current candle on the daily is equal to the previous candle. You can see the high and the low of both candles are almost identical here, and if we close around the 1297 level, that will be very strong for gold as we go into next week. The US dollar index also suffering here. We came up to a very key resistance zone around the 81.50 level earlier. That held, and we've now seen that retrace. We've seen a sell-off on the US dollar index, which has given a lot of support to the metals here. So not just silver, gold, sorry, not just gold, silver as well did manage to find support at a key zone today. We found support around the 2028 level. This was an important level again for silver to hold. We've got some key moving averages around this zone as well. There is a downward trending resistance channel which is starting to form here on silver, so we may be limited in terms of upside here for the short term. However, we will be looking to see whether we can break back above the 1256 level if we continue with some upward momentum here. You can see silver developing a bit of a trend channel here. We didn't break lower from 2028 though. We are still holding on to that support zone. We'll also take a look at palladium. Palladium very interesting here as well. We did hold on to a horizontal support zone at the 865 level. Now if we go into some technicals here, a little bit more detail on palladium. Palladium has recently broken out to 13-year highs. We've got a key resistance just above at the 900 level. We've got a huge V-shaped reversal pattern on the monthly chart. So we are looking to see whether we can see more upside here, particularly above the 900 level, and shoot for 1,100. That is the next major level of resistance on the palladium market. So palladium again finding support. We've got a nice hammer here forming on the daily, which is giving us potentially a decent setup as we go into next week with support around the 865 level. Okay, that's palladium. If we look at platinum, we're just actually on the futures market at the moment for October contract. You won't be able to see too much data. I can tell you we found support just at the lower end of the trend channel here for platinum, and potentially we've got a good buy opportunity as we go into next week. It's definitely one to watch. Now in terms of the energies here, both Brent and WTI are looking very interesting right now. Let me just show you those better on. We can look at some raw charts here. I'll show you first of all WTI. So WTI is currently testing a major support level at the moment. We're currently around the 97.35 level, so it is a major support zone. We've got a very strong trend line at this level. We've got previous resistance, new support levels, and this is going to be an important level for WTI crude oil to hold. So we'd like to see where this market is going to close today. If we take a look at the Brent market, very similar situation. Where actually 105 is a very key level for Brent to hold at the moment. You can see here the 105 level has provided support a lot of times in the past, and we want to see whether this will provide support as we go into the close today. 105 level, very important, and the 97 level, very important for WTI. So we're waiting to see the close on these markets to get further confirmation, and it could give us some very strong setups as we go into next week. Also, just taking a look at the softs here, corn has broken major support today, so we are in fact selling short corn at the moment. We're long gold, short corn, and we're just a break below 356 here. We're expecting a lot more downside here, and just keep an eye on wheat as well at the moment, because we have had a bit of a spike to the upside on wheat, but we want to see if it's going to close back within its downward trending channel. So that is what we're looking at the moment for today in terms of the technical. Very curious to see how the markets are also going to close. Okay, so the key news announcements you need to be aware of for the week ahead, we'll look at those right now. First of all, on Monday the 4th of August at 3 p.m. Central Africa time, 10 a.m. Eastern time, we have the CB Employment Trades Index. This report uses data from 8 labour market indicators, which makes up the Employment Trends Index, which includes initial unemployment claims, number of employees hired, job openings, industrial production, real manufacturing and trade sales. So a higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish for the US dollar. On Tuesday, the 5th of August at 3 p.m. Central Africa time, 10 a.m. Eastern time, we have the ISM non-manufacturing PMI. So the Institute of Supply Management Non-Manufacturing Purchases Managers Index PMI report as an indicator of the overall economic condition for the non-manufacturing sector. So a higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. Wednesday, the 6th of August at 3:30 p.m. Central Africa time, 10:30 a.m. Eastern time, we have the US crude oil inventories. And that data reports the number of barrels of crude oil commercial firms have in their inventory. Commercial firms report those inventory levels to the Energy Information Administration on a weekly basis. So a higher than expected reading should be taken as bearish for crude oil prices, while a lower than expected reading should be taken as bullish. And then we have Thursday, the 7th of August at 1:30 p.m. Central Africa time, 8:30 a.m. Eastern time, we have the US initial jobless claims. That data measures the number of individuals who filed for unemployment insurance for the first time during the past week. It is the earliest US economic data. Week-to-week numbers can be volatile. A higher than expected reading should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish. And Thursday, the 7th of August at 3:30 p.m. Central Africa time, 10:30 a.m. Eastern time, we have the US natural gas storage report. So the Energy Information Administration, the EIA natural gas storage report, measures the change in the number of cubic feet of natural gas held in underground storage during the past week. A higher than expected reading should be taken as bearish for natural gas, while a lower than expected reading should be taken as bullish. So another important announcement for the natural gas markets. Okay, so those are the 5 key news announcements we need to look out for next week. And of course, if you'd like to find out more about the live trading room, request information on the Gold and Silver Club live trading room program and our daily trade calls, please do get in touch at our Johannesburg office, just +27 11 083 8403, or simply go onto our website and go to www.jointhegoldandsilverclub.com. Also, make sure you subscribe to our newsletter as well. You will get free weekly reports on the precious metals, energies and agriculture, as well as live market analysis and prices. So do make sure you take advantage of that as well. So I shall leave these contact details on the screen for you. That is it for today's session, everyone. So good luck with today's post non-farm payroll trading. We wish you a good weekend, and we'll see you for next week's session. Okay, take care, everyone. See you in the next one. Bye-bye.